The current price of one MRF share is about 1,12,000 rupees. And this stock is now out of reach for retail investors like us. But you can actually go ahead and buy this 1,12,000 rupee share for just 20 rupees right now. Yes, I'm not kidding. You can now easily add the most expensive share in the Indian stock market, MRF, to your portfolio. That too without spending lakhs. So please watch this video till the end. I'm going to explain the entire process for you. I would bet that 99% of you do not even know the full name of MRF. MRF stands for Madras Rubber Factory. It was started in 1946. Back then, they produced toy balloons and gradually shifted to tire manufacturing. The company expanded from truck and bus tires to tires for two-wheelers and JCBs. And besides this, MRF also manufactures aircraft tires. In last 30 years, MRF has grown by 9,08,990%. And this specific share, listed at 11 rupees in 1993, actually crossed the 1 lakh rupee mark in the year 2023. Meaning, had you invested just 11,000 rupees in it, it would have become 1 crore. And had you invested just 1,10,000 rupees, you would possess 100 crore rupees as of today. Just imagine that. You would have every luxury high-end car like Ferrari, BMW and Rolls-Royce. But what now? Sadly, it is too late. Most of you must be thinking, if only you had owned a share of a big company like MRF. However, with its price now over 1 lakh rupees per share, it is simply out of our reach. Well, when someone hears the price of 1 lakh rupees, people often think it's India's biggest company. But that is not really true at all. Actually, MRF isn't even among the top 100 Indian companies. Yes, that's right. MRF's actual market capitalization is only 48,000 crore rupees, whereas India's top company, Reliance Industries Limited, has a market capitalization close to 18 lakh crore. Although it has even reached 21 lakh crore, and share price is only 1,260 rupees. In fact, companies like TCS, Wipro, and giant companies like Infosys also have share prices under 5,000. You are likely wondering what's so special about MRF? That this stock is trading above 1 lakh rupees. Let me explain it in detail. Generally, whenever a company starts as a private limited or public limited company, the price of its share is only 10 rupees. Now, as the company's underlying business operations grow and its profitability increases, the share price also starts to rise. So basically, when a stock's market price increases quite a lot, retail investors like us simply stop trading in those expensive shares. Because of this, stock liquidity decreases. Now, as fewer people trade in its shares, the company's name also fades from public conversation. While big companies aren't much affected by this, it is still the case that every company must consider its branding. And the stock exchange truly helps companies with their brand awareness. For example, I am sure that many of you must have heard the name Reliance mentioned again and again. Not because you have bought any direct product from Reliance. We rarely buy any products directly from Reliance, but it is simply because of its constant presence on the stock exchange for so long. That's why companies want people to keep mentioning their name and keep their visibility high. And whenever we happen to see a product of that company in the market, we might buy it. And most importantly, company branding and goodwill continue to grow. So basically, most of these companies want to keep their stock prices low so that more people can trade in it and their brand image can be recognized and remembered repeatedly. And that's why companies announce bonuses or stock splits. Suppose for a moment you have one share of a company, which is 5,000 rupees, and the company has announced a stock split in a 1:1 ratio. This means that any person who previously possessed one share of the company will now have 2 shares of the company. But the value of one share will now fall from 5,000 rupees to 2,500. Because by issuing a bonus or a stock split, there is really no change in the company's total valuation. It's only that the company's stock price gets adjusted. The share price of that company basically gets reduced. Due to this, these shares become affordable for people, and more people can now purchase these shares. Reliance, TCS, Infosys, Wipro, and many such large Indian companies keep their share prices affordable through their timely bonuses and stock splits. If these companies hadn't issued bonuses and splits, their stock prices would reach lakhs and they would have left MRF far behind. Let me explain with an example, then you'll understand. Wipro's share price is currently 305 rupees. Throughout the years, the organization has issued bonus shares 15 times and has also executed stock split 2 times. You can see the details on the screen. In 1971, the company gave a bonus in a 1:3 ratio, meaning 1 bonus share for 3 shares. This means someone who had 1 share in the company now has 1.33 shares. In 1981, the company again issued a 1:1 bonus. After that, these shares increased in a 1:1 ratio, meaning someone with 1.33 shares now had 2.66 shares. In 1985, it became 5.32, and after 2 years, in 1987, it became 1064 shares. By 2005, these 1064 shares became 76,608 shares. And following the bonus on 17th October 2024, the count became 6,80,960 shares. You can now see Wipro's entire and complete bonus history and all of the split details on the screen. This means 1 share from 1971 is equal to 6,80,960 shares in 2024. And if Wipro had actually never issued all of these many bonuses and stock splits, then today the price of 1 Wipro share would be around 20 crore 75 lakh 56,608 rupees. Yes, I have provided complete calculation on screen. You can pause the video and check it out. And yes, in this video today, I am going to tell you about a strategy that you can use to earn money from the market every single day. Although it sounds a bit strange, it is possible. All highly profitable traders active in the market today follow their own unique strategy. Similarly, I also have a fantastic strategy which I have taught in detail in my technical analysis course. This course covers 20 plus candlestick and 15 plus chart patterns, 20 plus trading indicators, live market trading sessions and technical analysis. With detailed notes of over 100 pages, and most importantly, you will be getting my personal trading strategy. And although this entire course costs 5,000 rupees, we decided for all our viewers that the first 100 people can purchase it for 1,000 rupees. This is a once in a lifetime chance, so please don't miss it. If you need any extra information about this course or a helpful detailed demo video, you can simply message us on this WhatsApp number. My team will personally share all the information with you directly. By the way, I have put all these details in the description. Do check it out. Now coming back to the topic. The share price for Infosys is around 1885 rupees. The company has announced a total of 8 bonus issues and 1 stock split to date. If we calculate it just we looked at for Wipro, the current price for one single Infosys share would be around 19,25,120 rupees today. Now you think about it. Is MRF truly India's most expensive share? The answer is no. MRF shares also had bonus issues in 1970 and 1975. And if this had not happened, the actual price of one MRF share would be over 2,90,000 today. But still, compared to the large companies like Wipro and Infosys, this particular price is nothing. This means we can't judge a company as small or big just by looking at its share price. Remember, even the share prices of India's biggest companies are trading between 2 to 5,000. But let me tell you actually, MRF is not the very first company to have such an expensive share. Page Industries, Honeywell Automation and many other companies have share prices valued at around 30 to 40,000 rupees. And guess what? You'll be blown away when you hear the share price of Warren Buffett's company Berkshire Hathaway. Because the current price of just one share of Berkshire Hathaway is around $7,09,000. If we convert that to Indian currency, it's actually about 5 crore 80 lakh rupees for just one share. Guys, even the richest of the rich won't be able to buy this. Now you must be wondering why all these companies do not reduce their share prices. Why don't they announce bonuses or splits for their shares? Well, the reason is the company simply doesn't want small individual investors like you and me to go and buy their shares. The stocks that are traded more actively on the open market with buying and selling, the more price fluctuations will increase. Since MRF shares are quite expensive, it means that no small investor can even buy this share. That's why most people don't even think about trading in it. And even if they choose to buy, it would only be small quantities. They won't be able to buy lakhs of shares. And this is the reason why this company's share price doesn't have much fluctuation and volatility. The major investors who have put their capital into the company have great faith in it. And they won't exit quickly. And MRF wants such investors. So that is why the company never thinks about making its shares affordable for smaller investors like us. Because our small investments make no difference to them. They already have big investors available. Besides this, MRF really wants to create positive branding by holding the title of India's most expensive share. Now I have told you all of this and I have given this information to many investors like you. Otherwise, the general public still believed that MRF is actually India's largest company. However, friends, I must repeat that it is clearly not even included within the rank of India's top 100 companies. By the way, do you think that MRF's management should reduce the price through a bonus or split? Do let us know your honest answer in the comment section below. We will definitely try to convey your request to the company management team. Who knows, they might actually listen to you and reduce the share price. After all, MRF is a massive Indian MNC that currently exports its tires to 75 countries. Even India's first car, the Maruti 800, had MRF tires. MRF also has many tie-ups for tire supply with big companies like Mahindra, Tata, Yamaha and General Motors. And what can I say about the company's branding? From Sachin Tendulkar to Virat Kohli, you will see everyone's cricket bat bears an MRF sticker. And that's why every child knows the name MRF. Though nobody really knows the full form. Currently, MRF is in fact India's largest tire manufacturer with a 25% market share. If you are planning to invest in MRF shares, you would certainly need lakhs of rupees, so please do not worry. Because I will tell you a very special way in which you won't actually need all those lakhs of rupees to invest in MRF shares. You can invest in MRF with just 20 rupees, but MRF's business is only related to the tire sector. And the tire industry has a very bright future ahead. In 2023, 21 crore tires were produced in India. In FY23, India's tire market was valued at 1,04,880 crore. And in the coming 6 to 7 years, this market will reach 2,04,000 crore. Approximately by 2031, this reflects a market CAGR growth of 8.71%. In other sectors, big changes keep happening from time to time. However, this is the thing that is rarely seen in tires. People are shifting to renewable energy these days. Many people want to buy electric vehicles. Everyone is abandoning diesel and petrol vehicles to switch over to EVs because they are much cheaper too. But the tires in an EV car are going to be the same, right? Meaning not just today, tomorrow, but even after lakhs of years, the demand for tires in the market will remain unchanged. And as the population increases and the demand for vehicles grows, the demand for tires will also keep increasing. Therefore, if you look at the future of the tire industry, there is strong growth potential. After a very thorough and proper analytical review, you can now feel quite comfortable investing in a solid stock from this industry for the long term. Now the important question is, which is the best stock in this sector? I know you'll think it must be MRF because MRF is the market leader. Well, that's not the case. If we compare MRF, the number 1 tire company, with the number 2 tire company, Apollo Tyres, the sales of both companies are almost the same. Yes, Apollo Tyres' current market capitalization is only 26,646 crore, which is basically almost half of MRF. But still, from FY20 to FY24, the sales of Apollo Tyres and MRF Tyres have remained almost the same. This means that MRF's market leader position is threatened. Perhaps just 5 years from now, it is possible that Apollo Tyres might beat MRF in sales. MRF's current PE ratio is 25 times, which is similar to industry PE. But if we talk about MRF's major competitors, Apollo Tyres hold 18% market share. JK Tyre holds 13% and CE8 has 11% of the market. And these companies have shown outstanding growth in the last 5 years. The PE ratio of these competitors is lower than the industry PE. JK Tyre has a PE of 11.6. Apollo Tyres is 18 times, meaning these companies seem undervalued by industry standards. Their share prices are affordable and they are not in the lakhs. They cost 500, 1000 or 2000. Just think about it. If you really want to keep 50 MRF shares in your portfolio, you will have to invest around 56 lakh rupees. And as I mentioned earlier, the stock has given a negative return of 20% in the last 1 year. But if you do a fundamental analysis and pick some good stocks, you can build a fantastic portfolio with 56 lakh rupees. As I told you earlier, MRF is the market leader with a 25% market share. Yet, while Nifty grew 101% in 5 years, that market leader has only delivered 66% in total returns to its investors since then. Looking at MRF's competitors, Apollo Tyres with 18% market share has delivered 160% return over the last 5 years. Apollo Tyres' share price is just 421 rupees. CEAT Tyres has also yielded a 200% return over 5 years. JK Tyre provided a return of 332%. JK Tyre is currently trading at just 313 rupees today. So here is MRF priced at 1,12,000. On the other, JK Tyre at 324. In other words, for the cost of just one MRF share, you could instead buy 345 shares of JK Tyres, offering much better returns. Now go ahead and tell me in the comment section which share you would prefer to purchase today. But even after hearing all of these details, if you remain absolutely obsessed with buying MRF, you can still invest in the company with just 20 rupees. In fact, not only MRF, you can even invest in India's top 150 mid-cap companies. For just 20 rupees, For that, you'll have to buy the ICICI Prudential Nifty Midcap 150 ETF. Its current market value is 20 rupees and 34 paise. Just like you buy a single share, you have to buy the ETF. Sell it whenever desired. You can purchase this ETF from any broker's mobile app, and ETF stands for Exchange Traded Funds. This ETF is basically a collection of stocks. It contains stocks from many different mid-cap sectors. Invest just 20 rupees to gain exposure to 150 Indian companies, including MRF. If you regularly want high return ETFs, then the Angel One app now has a completely separate section for you, where all the high return ETFs are available in one place. See, here you will find multiple categories of ETFs. For example, index ETFs, gold ETFs, silver ETFs, global ETFs, etc. Affordable ETFs are also available for you here. Here you will also find all the ETFs that are trading below Rs 100. Choose the one that suits you. Check their performance. And if it seems right, you can invest directly from there. Truly, this app is absolutely amazing. I have put the link in the description. Be sure to check it out. Look, with this 20 rupee ETF, you will invest in a total of 17 sectors. Financials, capital goods, services, healthcare, technology, and various other sectors are included. The holdings of this ETF are also fantastic. Major holdings include the market favorite Suzlon. Also included are Persistent Systems, Max Healthcare, Dixon Technologies, Lupin, and PB Fintech. So as you can see here, they have really diversified their holdings across so many different sectors. My point is that with just 20 rupees, you can diversify across 150 companies. You do not have to buy just one ETF for 20 rupees. You could invest 1000 rupees, or you can invest 2000 rupees. You can basically buy that many ETFs. These ETFs also trade just like shares. This ETF has given an outstanding 20% return in the last 3 years and 25% in the last 5 years. Meaning they work just like mutual funds. Much like mutual funds offer long-term returns, this ETF does too. And you know what? This ETF has in fact even beaten its category benchmarks. If we compare it with other ETFs, you will see its performance over a 5-year period is almost the same now. Our 20 rupee ETF has given a better return than the one priced at 1270. By the way, this isn't the only ETF. There are many other ETFs in the market where you can invest in multiple companies by investing just 50 or 100 rupees. By the way, please do let me know in the comment section if you want a separate video on ETFs. And tell me what your opinion is about MRF. Should the company really reduce its share price through a bonus issue or stock split? And so, do you personally still want to buy MRF share? Due to the SEBI regulations, I cannot actually give you any buy or sell recommendations. Nor can I give any target price for any stock. That is why I have shared all of my detailed research with you. The link to this full research is included in the description. We have conducted all this research using publicly available data. And we don't really have any personal opinion in this. I really hope you liked the video. Every week we present our latest research to you, so that you get to learn something new. Remember to subscribe to our channel.